I'm just going to start first of all by just asking very quickly, how many of you have never been to one of my webinars? In other words, for how many of you is this the first time you've heard me do analysis? If that's the case, just type a Y or a yes into the questions area. It'll just allow me to know whether I need to, should we say, explain some of the terminology. Okay, we got a few people. Yep. All right, no problem. So we got some people. We got some people for whom this is a first. So before we start looking through charts, in fact, let me push you across so you're looking at charts live, just to make sure that that is actually working. It's somewhat helpful. We do have a recording underway. Hopefully you can now see a chart of the E-mini S&P. I am hoping. I'm sure you can. So before I start going through charts, I just want to explain something, because sometimes there's a bit of a misperception from people in terms of what is it that I do. But people understand very often that I use the Andrews pitchfork to a fairly extensive level within the analysis, and so therefore they're convinced that what they're looking at is pitchfork analysis or median line analysis, and that's not really the case. I think that the Andrews pitchfork is kind of a double-edged sword. It's both an incredibly useful tool for finding what it is that I'm actually looking for, and that's a working slope. So what you're going to see for probably the next 45 minutes to hour is I'm going to look through a variety of vehicles. We can look at the E-mini S&P, dollar index, treasuries, going to look through some currencies, gold and silver, maybe crude oil. And what I'm going to show you is what I do basically on a daily basis as part of the morning analysis service, and also every Monday and Thursday at noon as part of a 1 hour or 45-minute webinar. And in fact, the webinar that we're about to do now is pretty much one of those standard Monday and Thursday webinars. And it's simply this. For each vehicle, I am trying to find what is the current slope. Sounds very simple, isn't it? That's all I'm really trying to do. For each vehicle, what is the current slope? Once I have found the current slope, in other words, the trend direction and trend gradient, I am then trying to find within that particular slope what is the current ceiling and what is the current floor. It's that simple. It really is that simple. So how do Andrews pitchforks fit into that? Well, the pitchfork is one method I use to find a slope. So this is the E-mini S&P, and you can see I have a very simple Andrews pitchfork here, and you can see that I have certain lines drawn within the pitchfork, and they're telling me where I think the current ceiling is and where the current floor is. And one of the things we're going to talk about over the next 45 to 60 minutes is what do the changes, the relationship between price and those lines, what do the changes within the relationship mean to me? Now, those of you that have been around for a little while are about to start raising your eyebrow and saying, oh, here we go again. But for those of you that are either in your first or second webinar, you may not have heard this. Think about this way. This is the current slope for the E-mini S&P. So this is the fork, but again, I don't care about the fork. It's the slope that I care about. The fork is irrelevant. It's the slope that's everything. So this is the current slope for the E-mini S&P. The way I look at this particular fork is simply this. Think about a treadmill. A runner running on the treadmill has to run to get towards the front of the treadmill being up here, and that being the LCD display that tells you how fast you're running. And he runs. When he stops running because he has run out of energy, the treadmill pushes him back. He catches his breath and starts running again. And he starts running. So you can see then that the further you get within the slope from the back of the treadmill to the front of the treadmill, the more energy you have. Just think about that and nothing more. Now, the runner starts running. Runs out of breath here, takes a breath, starts running. Runs out of breath here, starts running. Runs out of breath, runs out of breath. What you should be able to determine from the way I've just described this is a consistent trend. We have resistance, 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 resistance. And I can tell you now, unusually, potentially, because I know that most of you would be looking at this area of the chart and saying, wow, isn't the E-mini S&P looking bullish because we have a high, now we have a higher high and a higher high and so on. I don't look at it that way. The way I look at this particular chart is that, as far as I'm concerned, we have a high, we now have a double top, a triple top. Whoops, apologies, that's my charts automatically saving. We have a triple top, a quadruple top, and so on. These are equal highs as far as I'm concerned. Again, think back to the analogy of the runner running on the treadmill. So when he ran to this point here, did he manage to make it further or less far? No, he made it to exactly the same place. He made it to exactly the same place, and again, and again, and again. This little flash means nothing. Now, so that's the way that I look at a slope. So again, the first thing I'm trying to determine is what is the current slope, and then the second thing I'm trying to determine is what is the trend strength within the slope, or to put it another way, how energetic is our runner feeling today? Can he make it higher within the slope, or in fact is he having issues and now he's falling back within the slope? Is the trend strengthening? Is the trend static? Or is the trend weakening? That is all that's everything that I'm trying to do on a chart. Now, when we see changes within, shall we say, the runner's energy, I pay attention. So, for example, in this area here, he ran into resistance or ran out of energy in this area here. And we'd already had 3 bounces in this area here. So where would you expect the runner to start running again? Well, right here. So when he doesn't, and in fact, he actually falls back a little bit further, and more to the point, when he does start running, he actually runs into resistance here. Bit of a flush. Resistance, resistance, resistance. Think about it. You've now got support, support, support becoming resistance, resistance, resistance. And therefore, I'm very cautious this particular vehicle. And again, this is the E-mini S&P. So they're coming into the beginning of April, I became a little bit more cautious. And you can see with these blue lines, whenever you see blue lines like this, they're always drawn in contemporaneously. So, for example, if you see this blue line and you move your mouse down to like April 3, 4, that's exactly when that was drawn in on April 3rd or 4th. And what I was looking at that time was, I was looking for, can we fall back and find more resistance at this particular line here, because things are looking a bit more bearish for the E-mini S&P. Because of that, we draw in a downtrending channel to see whether the E-mini S&P will actually see a bit of a pullback, and paid attention to the fact that we've got resistance, 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 support, whoops, yep, support, support. Now, one key difference, think about it. Our original slope is an Andrews pitchfork, which you can see. Our new channel here is, well, a channel. It's nothing more than a channel, which to me is all a pitchfork is. An Andrews pitchfork is nothing more than a glorified channel. So whether I use a pitchfork, and bearing in mind with a pitchfork, there are 3 variants that we use, the Andrews fork, the Schiff, and the modified Schiff. If anyone wants me to explain the difference between the 3 of them, I'm very happy to do so. You will see examples of all 3 of those forks as we go through the charts. So I've drawn in a simple channel, and it's not necessarily that I think that E-mini S&P is about to like tumble 200 points off of a cliff. It's simply that we've got to change of behavior. Where we'd previously had support, we now have resistance, and therefore what I'm paying attention to is the fact that the E-mini S&P is stepping lower within the slope. But think about it. It was back here I was talking about that. That support there became resistance, whoops, resistance, again, resistance, resistance. Now look lower within the slope. Look at the next floor. Look at the support here, and look how this now becomes resistance. And again, at the time we drew in and said, look, something's amiss. We now have resistance in this area here at what had previously been support. So again, we're looking for a leg to the downside in the E-mini S&P. We work our way lower. Where would you look for support? Well, again, zoom out. We're now approaching the floor of our uptrending channel. So that would be the place that you would ideally be looking for support. And again, what I said in this area here, which would have been around the 8th of this month, is if we move to the upside, I would look for resistance here. And if we move to the downside, I would look for support down here. Well, as you can see, actually both of those played out. We rose up, hit resistance, fell back, didn't quite get to support, rose back up, hit resistance again, fell back, saw effectively 24 hours at support before moving to the upside. Now, do we have a change of behavior? Absolutely. Look at the ceiling of our downtrending channel. So it looks like the uptrending slope has taken over. So once again, our focus moves back to the uptrending slope. So in other words, this was a brief counter trend pullback, and now we've breached out of that channel and we're moving back to the upside. Where would you expect resistance based upon the uptrending channel? Well, to be fair, at the time, I'd look for resistance here. This is the line that had previously been resistance, remember? Back in this area right here. So I would look for resistance here. Didn't quite make it. E-mini S&P moved to the upside. I'd been looking up around 2086. We topped at 2077, and we see a bit of a pullback. And so when we get to here, which is the 14th of April, I'm saying to myself, well, at this point, we do not have a confirmed line. This green line right here, this line right here, is not a confirmed line. Think about it. All you've had, let me move the chart to the right, all you've had really so far is this. There is no reason to draw in a line. At this point, I'm still looking for resistance up in this area here, and potentially what we've actually had so far is just a high, bit of a pullback, and then we move on up into resistance. That's what I would be looking at. But when we get the next touch, which is again pit perfect, which does two things. What does it do? The first thing it does is it tells me the slope is still active. This is still an active slope. The trend is still abiding by this gradient. What's the next thing it tells me? Well, the next thing it tells me is that the ceiling, which I've been looking for up in this area right here, looks like it's actually down in this area here. So therefore, I'm going to look for two things. And it's not massively complicated, but the real trick to this method is just identifying the slope. That is 95% of the problem. Once you understand the academics of the method, it's really all about identifying the slope. So where would you look for support? Again, this is not a trick question. You would look for support, well, of course, right down here. And again, this is what I said back on the 14th. Look for support down here. That worked out nicely. ES came down, bounced on, I believe it was Monday morning, down around 2057. And where would you look for resistance? Well, obviously, you'd look for resistance, as I said, up in this area right here. So did that work? Well, let's now drag forward to where we are right now. Yes, it did. We rose up, we hit resistance, we pulled back. And I said again on the 20th, which was, I believe, yesterday, I said again, I would look for resistance here. Well, that again happened. We actually hit it yesterday afternoon. And again this morning, I said, well, again, if we move higher, I would again look for resistance here. But where would you look for support? Pretty obvious, isn't it? That's the place to look for support. So I will be watching down around 2077, 2078 for support. If we take out this particular line to the downside, it would be significant because this particular line has held effectively, I scrunch up the chart a little bit, since back in this area here, 10th, 11th of the month. We ground along it, remember, for 24 hours. We hit it back on the 18th. And so I will be watching for support around 2077. If we take it out, it would be significant. So let's talk about context just for a second, because if you simply play the channel and have no thought for whether you are strengthening or weakening within a slope, then what you will do is you will say to yourself, that's the place to get long in the S&P, and that's it. I'm getting long there, and I'm going to use whatever, like a 5-point stop, a cash stop, a 1% stop, whatever. But here's the thing. Just reading someone's question. I'll answer that in just a second, Mark. Look to the left. Look to the left. You would probably, or at least I hope, you would agree that broadly speaking, this is the channel that we're paying attention to. Would you agree? Until, like, here. Now where's the channel? Well, this is the channel now. Would you agree? So what has happened within the uptrending slope? We've stepped down. Think back to the runner. The runner obviously is aging a little, or he's running out of energy because he was actually running a lot higher in the slope, and now he's only barely able to get up to the what had previously been a floor is now a ceiling. So context is bearish, and all that means is, yes, we're in a bullish slope, but context is bearish. In other words, the way I look at it is this. If I think that if it's down to, are we going to breach this line to the upside, or are we going to breach this line here to the downside? My money was on a breach to the downside. Hopefully you understand why. It's simply this. If you have a behavior, I expect the behavior to continue. And the behavior so far is that support has breached and become resistance. And therefore, I would expect this support at some point to breach. If anyone's unclear on any of that, let me know, but hopefully it's relatively clear. And I've tried to use this particular chart, E-mini S&P, because the ES is just generally works incredibly well. But I wanted to use this as a really good example as to how I just generally look at slopes. And it's also an example of not only of a slope that's working very well, but also a vehicle that's stepping down within a slope. Mark has asked, if a new slope within the uptrend seems to be coming to be become more dominant, when would you consider using that rather than sticking with the ES? With the existing. Sorry, I'm actually trying to read two different questions at the same time. So look, it's really simple. Very often you'll see two slopes that are working, and actually this area here probably isn't a horrible example. So in this area here, we're paying attention to an uptrending slope. Things turn bearish. When things turn bearish, I use that as the catalyst to have me draw in something to the downside. And what would happen is I would really consider this to be a wedge, because what I would consider is that we probably have support coming in on the uptrending slope, but we also have resistance coming in on the downtrending slope. So I would actually look at this as being something of a wedge, and then what I would look for is I would look for it to resolve either to the upside or downside to tell me which slope is actually still in the driver's seat. So if in fact what had happened here was we had done something like this, then as far as I'm concerned, my attention turns far more to the downtrending slope than the uptrending slope. Hopefully that answers the question mark. It's really quite simple, which is which slope is calling the shots in terms of the highs and lows. In other words, are the highs and lows higher, in other words the upslope, or lower, in other words the downslope. Trip says ES is taking its time to turn bearish. Context into yeah, absolutely. Trip, I completely agree. So Trip is making the point that look, you know, the ES has been bearish for a while and it just doesn't seem to want to fall out of this particular fork, and I completely agree. Stephen says, is there a reason all slopes are variants of 45 degrees? I don't believe that they are, Stephen. I don't believe that they are. Let me go and look at something like, let's have a look here at, I don't know, that's crude oil. And crude oil, I mean, there's like a relatively shallow chart, a shallow slope in this area here, which then morphed into an incredibly steep slope in this area here, which is definitely more than 45 degrees. Okay, Mark says, thanks, it does. Often get messed up by following more than one center line. You know what? Actually, Igor, that's a really good point. So Igor has just reminded me that actually, if you want to see a steep slope, look at Treasuries. Where is it? Gosh, give me a second, guys. 1 second. Wasn't it that one? That was the one right there. We were following this particular slope back in January, if I believe. January, February. And I think when I saw it working, it was like here. And I said, it looks like a great fork, but I really don't believe it's going to work. And I turned out to be a bit of a fool, because it continued to work for, I think, like several weeks after. And that's how steep that particular fork is. So there's an example of an incredibly steep fork that worked incredibly well. And again, the move to the upside that we saw, it was a blow off top, which took us up to resistance. And now we're actually paying attention to a downtrending slope in third year. This is the third year. And then again, we've morphed back to an uptrending slope. So you can see that as the vehicle ebbs and falls, rises and falls, we actually just really draw in the relevant slope to pay attention to it. So that was the E-mini S&P, and I'm conscious that we're already 20 minutes in and we've looked at one chart. So I'm going to pick up the pace a little bit. And by the way, in case anyone's wondering, because I know I haven't done one of these public webinars, believe it or not, in 6 months. Very, very unusual. I used to do them every, I don't know, 6 or 8 weeks or something like that. Haven't done one in 6 months. Every few weeks I have people asking me to do it. So finally I've decided to change tack and run them again. If anyone, though, in seeing what you're seeing are interested in seeing the analysis every morning, you can see the URL right here, cogncapital.com/promo. You can go to that page right now and get discounted access to the service. Now, that is the extent of my push for the service. And most of you know I don't really spend much time doing that. I'd rather look at the charts. So let's look at the dollar. So the dollar has worked phenomenally well lately. Let's look at the dollar on a daily chart. So, Ron, no problem, thank you. So here's the dollar index. We've been looking at support and resistance, and might look a little bit sloppy, but effectively what I'm paying attention to is this downtrending channel right here in the dollar. And more recently, what we've been looking at is back in March, we were looking for a push to the upside into this area here. And what I suggested at the time was I would look for resistance at the green line. That worked out really well. We fell. I actually have been saying for about the last, 3 weeks that I thought that we were at support. In other words, I thought that we were like grinding along support in this area here, and I thought we'd see a push to the upside, which we did. We saw a nice push to the upside. It looks very messy, but you check all the videos each morning, and that's exactly what we were saying. I said, look for a move to the upside. Then when we hit this area here, I said, I think that we've hit resistance, because this is a line that had previously been support several times, and I was watching for it to be resistance, and sure enough, that worked nicely. We fell back, and then I think it was, gosh, was it? Actually, I think it was like this morning, and I said maybe, no, it was yesterday. Yesterday, I said maybe look for a bit of a push back to the upside in the dollar. And again, that seems to be working relatively well. So why am I looking for a bit of a push back to the upside in the dollar, which we do seem to be seeing right now? It's actually based upon 3 time frames. It's based upon the monthly time frame, and you can see back here, this is back in whenever that was, I don't know, December. This is back in December. I said these lines were drawn in 4 months ago. And I said, look for a bounce down in this area here. And that's exactly where we are right now. And as I've said for the last several days, watch the close on this bar. Watch to see whether we do bounce at this support. Now look at the weekly chart. Again, we're looking at a line, an action-reaction line that had been resistance, 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 becoming support, support. And I was looking for support in this area here. And again, that seems to be working out relatively well. Dollar is holding above support, but it's also holding above support in this particular slope. So I actually have 2 slopes that converge at this area right here. And again, you can see even back in this area here, which was May of last year, I was actually looking for support, and it's actually worked incredibly well. Trip, I'll actually put them in chat afterwards. Trip was just asking me how far back do these slopes go. Actually, Trip, if I remember right, this blue line is your line. I think I'm right in saying that. That was your action-reaction line. Resistance, resistance, resistance becoming support. And it's actually, yeah, I think so too. And it worked out pretty well. And then, of course, all we do is we take a clone of the line, draw the clone of the line up above, and we look to see whether the high proves to be resistance once more. And again, it did. So, again, the dollar has fallen into support on the weekly, support on the monthly, and support on the daily chart. And again, I'm just looking to see whether we can punch through about the 90, about the 95 area, if I'm honest. So, so the dollar is again seeing a little bit of a lift. There was another, maybe 2 or 3 reasons why I was looking for the dollar to see a bit of a bounce. I don't know how many of you, when you're looking at certain vehicles, take into account correlations. I do in a massive way. So I'm a big believer, for example, in paying attention to what's going on in the euro and the Swiss franc when I'm looking at the dollar. I'm a big believer in looking at Canadian dollar versus crude oil. I do not look at the Australian dollar versus gold, and I really don't think there's much of a correlation there whatsoever. I think there used to be historically, but there isn't anymore. And from time to time, I will look at Japanese yen versus equities. Ruble versus oil. Well, yeah, I mean, to be fair, I look at oil versus ruble, Canadian dollar, let me think, peso, Noki, all of those really versus crude oil, if I'm honest, but Canadian dollar specifically. Anyway, so the dollar, potentially I'm looking for a bounce. Why is that? So the reason, as I described, I think it was yesterday, is I think we have certain vehicle currencies at potential resistance right now. So let's step up and look at some of the currencies. So the first one to look at, which isn't on the chart, so let me bring it across. There it is. So the first one to look at is actually the Australian dollar. So I've been paying attention to the Australian dollar, and we turned bullish the Australian dollar back in this area here, February, March, because we breached through resistance. And what I said at the time, even though the lines have been deleted now, is as we were pushing through this resistance right here, I said, great, we now have basically air above where we are. Next place I would look for resistance would be all the way up in this area here. I've deleted the lines, but the circles remained. Well, we rose up, we hit that resistance yesterday. I am watching the Australian dollar, and I'm watching it closely to see whether we get a bearish close on this particular bar here. Again, this is a weekly bar. It will close tomorrow night. So that's one vehicle that's potentially hitting a bit of resistance versus the US dollar. And, you know, to be fair, there's very little correlation between the Australian dollar and the dollar index. If you look at the dollar index basket, the one to really pay attention to is the euro, which we'll look at in just a second. And obviously the euro's had a very volatile morning, as has the dollar index, to be fair. So let's step down and see what else potentially was showing that it might see a bit of strength versus the US dollar. How about the Canadian dollar? So Canadian dollar's been relatively strong. This is the slope that we've been paying attention to for about the last 2 to 3 months. It's been working phenomenally well. You can see we've been looking for support and resistance. Most of the lines have all been deleted at this point. We've had at least a dozen times we've been looking for support or resistance on this particular slope. Most recently, we were looking for resistance right here, which worked beautifully. We were not looking for support here, but when we rose back up, I did look to see whether we would get resistance at this line here, which again worked relatively well. We had a pullback from 28.90 down to about 27, I don't know, 80, about 110 pips. Reverse back to the upside, and again, as we took out this resistance here to the upside, the next place to look for resistance is obviously going to be in this area here. So again, we pop up, we hit that resistance, reverse back to the downside. So if you're reversing to the downside in the Canadian dollar, bearing in mind the correlation to crude oil, what would you expect crude oil to be doing? Well, you'd expect crude oil to be climbing. And actually, crude oil has been doing that quite nicely. So keep an eye on CAD if you're watching crude oil, and vice versa. And then as we did start to fall back, and you can see this is back on whenever the 18th was, Thursday I'm guessing, or maybe on Friday, what I said here was I would look for support down in this area here. And again, you can see that worked out very well. And all I've done, again, there's nothing complicated here. I'm simply cloning lines from the original slope. That's all that's happening here. And you can see that we have a low back here on the 12th. That's exactly where we bounced. We took a bounce from 26.30 to 27.30, 100 pips to the upside. And then when we start pulling back, this is, I believe, yesterday, I said, well, I'd still look for support down here. It looks like it's still working. And again, it actually, I wouldn't say this was a pit perfect bounce. 04 was the line. We went through to the tune of about 10 or 12 pips. Mooksy, sorry if I'm pronouncing your name wrong, I apologize. Mooksy is saying, do you think it's early for a bullish fork on the Canadian dollar? That spike seems like a real C pivot, to be honest. So let's look at that in just a second. So we got the second bounce and we're on our way up. So what you're probably going to be finding now is that I would imagine that crude is probably seeing a little bit of a pullback based upon what's going on in Canadian dollar right now. Now, Mooksy is saying that the spike looks like the C of a fork. I'm guessing he means this particular C down here, and I'm not really too sure, but I'm guessing you're talking at a fork that looks something like that. Potentially, I don't know. I'm not sure what one you're looking for, Mooksy. But here's how I look at the chart. And Mooksy's question was really this. Okay, that was it. Well, you can draw that in and just keep an eye on it. But there's a real problem with drawing in a fork, and it creates a bias. If anyone's interested, I actually have 3 slides to show you, which would probably be slightly surprising when I show you them. Basically, all 3 show the identical same chart, but one of them looks bullish, one of them looks bearish, and it's simply because forks are drawn in. So I'm always wary about drawing in forks until I really feel there's a need for them. Here's how I look at this particular chart, Mooksy. This slope is working. Okay? The slope is working. There's nothing wrong with this slope whatsoever. It's working perfectly. If I start seeing something bullish, so in other words, let's say we see resistance, then we breach resistance and it becomes support. We come up to resistance, we breach resistance and it becomes support, and we do something like this. Then I would absolutely be saying, okay, we need to be drawing in something to the upside. It looks like we actually have a very significant change of behavior. I'm actually just pulling up that set of charts because I've had a few people say, please, can you show it? So where is it now? 1 second. I'm just literally scrolling through something on another. Apologies, guys. Bear with me just 1 second. Here we go. So what I'm going to try and show you is so this particular vehicle, this is just trying to show you one very simple thing, and it's simply this. If you draw in a pitchfork or a channel, you have immediately created a bias. Whether you know it or not, you've created a bias. So if you look at this particular vehicle here, and I was to say to you, do you lean long or short on this particular vehicle? My guess is I'll have a number of people saying long and another group of people saying short. If I said to you now, which do you probably lean towards? Do you lean more to being long, or do you lean more to being short? I'm guessing that there would be shall we say, a higher percentage of you saying, well, I'd probably be, wanting to get long now at this point. So now which would you prefer to be, long or short? This is exactly the same chart, and all I'm trying to make the point is, now you would probably not want to be getting long, and in fact you'd probably be saying, well, maybe I want to get short now. And if I said, now what do you want to do? You'd say, well, it's in a wedge, I really don't want to be doing anything. So again, the underlying point is this. It's the same chart, and it's only by drawing in the lines that you actually create the bias. I don't know whether that really makes much of a point, but I hope it's useful. So back to the charts. So in terms of Canadian dollar, yeah, I've got no problem drawing in something to the upside, but I need to see something bullish happen for me to want to do it. Okay, hopefully that answers your question, Muxie. Alrighty, so yep, no problem. You're very welcome. And Steve, hopefully those slides helped. Oh, and another Stephen has said they were very useful. Yeah, it's really surprising sometimes when I show those charts and people, it kind of raises an eyebrow. Alrighty, so that's the Canadian dollar. So again, think back to how we started looking at currencies. And by the way, we will be looking at gold and silver. I've had some people asking for gold and silver. So I've said that I'm potentially looking for a bit of a bounce in the dollar. The Canadian dollar is an inverse currency, meaning that as it rises, it's weakening, okay? If anyone's confused about that, say so. This is cash FX. So if you're looking at the Canadian dollar, the Swiss franc, the Japanese yen, any of those vehicles weaken as they rise. They strengthen as they fall. So therefore, if the dollar is going to see a bounce, you would expect the Canadian dollar to weaken, i.e. move higher. And that's exactly what's happening. Canadian dollar is moving higher. Think back to what I said about the Australian dollar. The Australian, whoops, wrong chart, that's crude oil. Think back, here we go, Australian dollar at resistance, potentially going to see a bit of a pullback. So the Aussie and the CAD so far are hinting maybe the US dollar might strengthen. So let's go and look at the big one, if you like, the big kahuna when it comes to the dollar index. So this is the euro, and what I've been looking for, Scott says, these are great points. You use lines for insight, but the lines create reinforce a perspective and filter information with a hey, don't worry, Scott. I'm just trying to get to what you're trying to. I think, Scott, what you're actually saying is this. The lines. In fact, I think what you're almost doing, tell me if I'm wrong, is hitting the ball back over the net at me and saying, well, you're making the point that drawing lines creates a bias, then surely if you're using lines, you are creating a bias. Am I kind of Oh, you are saying that. Perfect. But the point I'm trying to make, Scott, is this. If you draw I guess what I'm really trying to say is, if you draw the wrong lines, you'll have the wrong bias. And it's all, and I think, as I said at the beginning of the webinar, it's all about selecting the correct slope. So if I look at the euro, you can see hopefully that this is a slope that has lots of respect. You can see lots of evidence that the slope is validated. Once you have a validated slope, I'm fine with it. But what I find too often is, let me just give you an example. What I find too often is this. You'll see a single bearish occurrence. So here we go. We've fallen through support, we rise back to the upside, and we find resistance in this area here. And what I find very, very much is that people will immediately say, well, there you go. Now it's bearish. I'm going to draw in a fork. And right, that's it. I make it a modified shift. So I'm going to get short right there. That's where I'm going to get short. The point I'm trying to make, Scott, and maybe I'm not communicating it properly, is that this is in no way a validated slope. There is nothing here about this purple slope that tells me that it's working. And the point I was trying to make is that if you leave it on the chart saying to yourself, well, I'll just leave it on there, and if it does start to work, maybe I'll start to pay attention to it. The danger in that is that the lines are there. And whether subconsciously or not you realize it, that you are actually creating a bias to get short in this area here, even though this fork has zero validation whatsoever. I've got no problem adding lines to charts. Well, you can see that. I've got lots of lines on charts. It's more about only when a line or a slope has been validated will I use it. I don't know whether that really answers your question. Steve says, when would you decide the new fork was validated? Yeah, I'll talk about validation. And Steve said, no, hang on. Yeah, Tripp says each line has to earn its place on the chart. That's something I kind of pretty strongly believe. Someone actually, oh, here we go. So Scott then says, do you use horizontal lines in your analysis? Yes, I do, but I might use them in a way that you don't expect, Scott. Let me show you what I mean by that. So E-mini S&P. I turned a little bit cautious in the E-mini S&P middle of last week. And Scott, oh, brilliant, good. I think I did answer your question, good. So I turned cautious in the E-mini S&P right here. And the reason that I turned cautious is two things. Let me explain it this way. And those of you that have been around for a while know what I'm about to talk about, which is basically the breakout trades. So would you agree, based upon this particular chart here, that probably the worst place that you could get long the E-mini S&P would be right there? And the reason is, I mean, you can see yourself, it's the worst place because all you're doing is coming right up into this resistance here. Now try and imagine the chart with no slope on it, and all that's on it is horizontals. So what's actually just happened in this area right here? We just took out the prior high. Would you agree? Yes. Prior high right here, we take it out. So what happens is a lot of people, and this is why I become very cautious when a prior high is taken out. A lot of people put their buy stops in this area right here, and they say to themselves, well, look, we just took out, what did we take out? Actually, we just took out a psychological level, 2100. I definitely want to be long the E-mini S&P. We're probably going to be at 3000 by Thursday. So they want to get long in this area here. What inevitably happens is that when all of the weak hands get long in this area here, is that you immediately then see a pullback. So the reason I turned a bit more cautious middle of last week, which was here, was simply because look to the left. And I know I have an affliction, as members know, which is I draw in about 2,000 circles on every chart. So I apologize for all the circles. But the point I'm trying to make here, if I can try and remove some of these circles and make the chart somewhat legible, or a little bit more legible anyway, it's simply this. Look at the prior high in this area. It's a pretty significant high. I'm just trying to get all these circles. There you go. So we've actually got a prior high there. Let me zoom out a little bit more for you. There's your prior high. Right there. See it? So when we take this high out to the upside in this area here and start meandering around, I become really cautious. And it's because of the very same thing I just spoke about. You've got the people getting long in this area here. The next thing, the vehicle reverses against them. It reversed into the weekend, gapped lower Sunday night, hit the support that we'd been looking at, and rose back to the upside. So actually, the people that were getting long here would have been okay if they had stayed long. But the problem is, as you know, the weak hands get long, and then they're out a few hours later because they see their position bleeding ink. Now, okay, I've got so many questions to read here. I'm sorry, I'm scanning through lots of different questions here. Apologies, guys. When we draw too many lines, we tend to create narrow zones, limiting profitability. Yeah, Yana, I mean, I think, Yana, what you're really saying here is this. If you draw a sliding parallel in, let's say here and then here, and slide that one up to that significant low, then you draw in another one over here and say, oh look, it looks like we've got light lows here and here, and before you know it, you end up with something that looks a little bit like this. And then the problem you've got is that price comes down, bounces off of a line of support, and then every like 2 points you're like, well, this is resistance, oh, now this is resistance, oh, this is resistance too, and every point or two you have new resistance. I completely agree. You end up with analysis paralysis. The way I look at it is this. You simply draw your sloping lines from significant highs and lows. This to me is not a significant low. This is not a significant low. To me, I look at like the extremes of the moves, and I think that's, if you do that and you try and, should we say, unclutter your chart. And now, to be fair, I'm not perfect. You can see I've got probably some lines here that I should probably remove from the chart. But nevertheless, I would look only at the significant highs and lows. Scott says, if you look at your bottom channel target right now, real time, price would come down to a previous breakout area, which is a confluence. Please. Oh, all right. Yeah. Okay. Scott finished it off by saying, please don't let me distract you, as I'm busily reading his comment. So I think Scott's point potentially was, look, you actually have resistance in this area here. It was kind of messy resistance here. You then get a breakout into this area here. So therefore, if the E-mini S&P does fall back, this actually somewhere in this window down here, and I'm again having to paraphrase what I think Scott's saying, is somewhere in this area here probably wouldn't be a bad area for a long. I think that's what you're saying, Scott. But obviously I would pay attention more to the slope. Now, again, we're back to the E-mini S&P. I really did want to show more charts because I know people have more interest. So let me go back to the currencies. Euro. I think this is where we... Scott says most people are that smart and they're using the horizontals. Are that smart? I'm not sure whether that was a typo and you meant aren't. I don't know. But I agree with you that most people use the horizontal, Scott. That I completely agree with you. The thing I don't get is this. Let me move my chart over, and I know I'm kind of going off on a tangent here. You would all agree that that's a slope. That is a channel. Okay? I'm not stating I am stating the obvious. You would all agree that that's a slope and that's a channel. What some people seem to have a real problem with is when I say that's a slope and that's a channel. Well, obviously it's a channel, but I guess what I'm saying is this. Most people, for some reason, just don't seem to be able to understand that to me a horizontal line is a slope. It's just a flat slope. So if you've got a vehicle that is trending sideways and you've got, let's go back to having our channel. So you've got something like this going on. Whoops, let's try one more line. So you've got something like this going on where we're stuck in a range. This vehicle is stuck in a range, and then we fall through through support. It becomes resistance, and we move back down, and now we find fresh support down here. I mean, this all looks very standard. The point I'm trying to make is why do people have this inability to look at exactly this and then turn it on a slope? That's all I'm doing. I'm actually watching exactly that, but on a slope. It's incredibly simple. It really is very, very simple. So think back to what I just drew in. That's exactly what's going on here. Here is our channel. That was the channel that we were paying attention to through the first part of April, and I kept saying, I'm watching to see whether we will actually fall out of this particular channel. When we did start falling out of the channel on this morning right here, this was on the morning of the 13th, I said, this is a significant change in the euro, and I am now looking for support down here, right down here. And from memory, it was like 112.20s, 112.30s, I don't remember. Let's have a look. There you go, 112.30. So that actually worked out well. And again, we flagged at the time, look, we're bouncing at support. We nearly got a second touch at support and we returned back to the upside. Where would you look for resistance? Again, this is not a trick question. You'd look for resistance, and I'm being absolutely honest in terms of what we were looking for. We were looking for resistance at this line here, the green line up above. But what we paid attention to in the last day or so is simply this. Look at the three highs. In fact, look at the two highs. This is what I looked at about 6:30 or 6 o'clock this morning, Eastern. And what I said was, look, maybe what we have here is support on these flushes. Don't look at the floor, look at the flushes. And in fact, maybe what we actually have is that the flush here and the flush here, actually in the flush here, is now resistance, resistance. So the euro falls back. And what I said this morning was, in fact, we were looking for a move lower yesterday. So yesterday I was looking for a move lower out of this area because of that, and that worked out incredibly well. And then this morning, we were down in this area here. And what I said was two things. I said, A, we've got ECB. We've got ECB interest rate decision, and we also have the press conference at 8:30. So I probably don't think the euro is the best vehicle to be messing around with this morning. But that being said, in terms of support and resistance, where are we? Well, we're obviously pretty close to support. So I think what I actually said was I'd probably lean to the upside purely because we're closer to support. So again, we popped to the upside. Now, bearing in mind the volatility out of ECB, look how well the resistance worked. So this was from 112.90 to 113.90, 105 pips to the upside, tagged resistance, almost pip perfect, and fell all the way back to the downside. And, well, we came to within, let's have a look here, 69, 62, within about 7 pips of support. So the point I'm trying to make is this slope is absolutely working. It's worked continuously for several months now, and again, it's one of the reasons that yesterday I was looking for a bit of a bounce in the dollar in this area here, because we now have support becoming resistance. Think back to my underlying issue about the dollar maybe seeing a bounce, the Aussies at resistance, the CADs at support, the euros at resistance. I'm trying to think where else to go with this. Let's go to, bearing in mind the time, what else have we got to look at? Did we look at treasuries? If no one's interested in treasuries, I'll go straight to gold and silver. Hang on. Yule says, do you think this puts a drag on the potential dollar index rally? Well, I mean, as I said, this is what I'm looking at on a dollar index. That's what I'm paying attention to right now. We're at support on the monthly chart. We're at support also on the weekly chart in this area here. So to me, we're kind of in a critical area for the dollar right now. Francois says, yes, please, can we look at the treasuries? So if you recall earlier in the week, and I'm having to term it this way because I know there's a lot of members in here now as well. Earlier in the week, we paid attention to the fact that we actually have resistance. And so what I said was to maybe look for an extended move to the downside. This is the 10-year notes. And that seems to be working out pretty well. On the 30-year, we're kind of still stuck in the wedge. If you recall, we rose up and we hit the resistance back in whenever this was, February. February. So resistance, and as far as I'm concerned, this is just in no man's land. I have no opinion on the 30-year on a weekly chart. What I would be paying attention to is actually the smaller time frames. This is a 240. So think back to what we talked about changes of behavior and context. So this is 10-year notes on a 240-minute chart. We have a slope that was working well to the upside, and prior to that, I think we even had a downtrending slope. So we actually had a downtrending slope. We watched the fact that that particular downtrending slope, resistance became support in this area here. So now we become bullish. We draw in an uptrending slope, which was a modified shift, following the modified shift to the upside. And then, as messy as it looks, this is what we started paying attention to about a week back. Look at the support here becoming resistance. And if you actually look, that's exactly what I said back on whenever that was, the 15th. So on the 15th, I said, look to see whether this becomes resistance, because it looks like we've fallen out of our uptrending slope. We fell back, and now look, again, support becomes resistance. And then this support has breached to the downside. We actually had a tentative fork in this morning that didn't pan out, so I've drawn in a simple channel. And I'm simply watching to see whether the 30-year and 10-year are going to continue to the downside. But as I said earlier in the week, the weekly, I mean, you've got a lot of room for movement to the downside. But if you want to talk about a chart where you have a lot of potential room for movement to the downside, it's this one. Japanese yen. This is a slope that goes back to 1989, I think it is. We were watching for resistance throughout the back end of last year, and we fell nicely away from that. So if you want to, someone asked a little earlier, how far do some of these slopes go back? This particular one goes back to like just before 1990, so about 27 years. So some of them do go back a long time, especially obviously the larger time frames, the monthlies. Let's go back. So we looked at treasuries. I know we've done the dollar. I'm trying to think what I haven't actually covered. Gold and silver. So let's go to gold and silver, because I know that some of you have an interest in that. Let me try and pull that up quickly. So I talked about two levels this morning in gold and silver. 1272 on the 240-minute time frames. 1272, which I think was almost pit perfect the high. And then on silver, was it 62? Yep, 1762. So let's go back. So this is an uptrending slope in gold, which we've been paying attention to. So I've been a bit cautious in gold back in this area here, and the reason was resistance. We had a huge move above it. It then became resistance again. So back on whatever day that was, the 14th, I became a bit cautious, and I actually said maybe just be careful and look for a support down around the 12. I think it was like 1225 area. Let's have a look. Yeah, I was looking for support down around 1223, 1224. We actually bottomed at 1225, so that worked out relatively well. But what it's telling me is that the uptrending slope is working. So think bigger picture. Yes, we actually had a downtrending slope. The downtrending slope was working. Again, resistance. And we don't really so much get support, but we've definitely pushed out of that downtrending slope. And excuse me, we're now abiding by an uptrending slope. So again, from this area here, I the phrase I always use with gold is cautiously optimistic. So for about the last week, I've been cautiously optimistic. That's worked out pretty well. I said just make sure you can punch through resistance in this area here, which was 1247. Yeah, 1248. We did punch through it. I looked to see, this was, I think was yesterday, will this line now become supportive? And it actually was supportive throughout yesterday until we got into the afternoon. Asia saw a bit of a dip beneath that support line. We reversed back to the upside. And so what I said this morning was, all I basically did was take a cloned line from the fork. I drew it in from the prior high. And I said the place that I would look for resistance on this particular slope would be right there. And that would be 1272. So 1272 seems to have worked. We popped up. Again, this is courtesy of ECB and dollar. So gold pops up, tags resistance, pops back to the downside, and as far as I'm concerned, we're holding at support right now. To me, this is the place to look for support right here, around 1250 and 1272 for resistance. And again, I was posting, I think, the metals trades chat page just as we were like tagging this area here and saying we've just hit 1272 in gold, so I'd be maybe a little bit cautious to see if this resistance does hold. But what also accentuated my caution this morning was simply the fact that not only was gold at resistance, silver was at resistance also. Again, uptrending slope, and as is the case with gold, I've done nothing different. I've done exactly the same thing. I've gone simply to the very highest high, drawn in a sliding cloned line, and that made me say this morning I would look for resistance in this area here, which was around 1762. And so we popped through, to be fair, to the tune of about 10 cents, it looks like. About 10 cents and reversed lower. But as is the case with gold, that's the place I'm looking for resistance in silver. And that's the place that I'm looking for resistance in, support in silver. And as far as I'm concerned, both of them worked. If we look at the slightly larger time frames, let's see what's going on here. So gold. So there's the channel in gold. We got a downtrending channel. I'm actually a little bit more optimistic, as I said, over the last week. And that's a good question. I'm actually going to stop and read that. So Dan has just said, Paul, as long as you can draw in precise channels with parallel lines on the highs and lows, do you really need to draw in pitchforks? And the answer to that is no, you don't. People Dan, some people who are, shall we say, devout followers of Dr. Alan Andrews will, insist that the pitchfork is, I don't know, the holy grail. As far as I'm concerned, it is simply a tool that allows me to find a channel. Now, having said that, I do find it a lot easier to be able to draw in like an Andrews, switch it to a shift, switch it to a modified shift, and jump between them and see if I can quickly identify a channel. So for me, it saves a lot of time. Now, if I can't find a channel using a pitchfork, then I'll do what I've in fact just done here, which is, well, I'll just draw in a simple channel. And so I don't know if that answers your question, but you don't technically need to be able to draw pitchforks, no. So the reason I've been cautiously optimistic on this particular vehicle, gold, is simply that if you think back to 2013, 14, 15, we actually have resistance, 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 resistance. Now look, we pop through resistance, and by the way, I need to look at the horizontals. Someone asked me, do you use horizontals? This is one example as to where I do. So look, we've got a significant high in this area here. We take out that high in a pretty significant manner. This is a full-blown breach. We come back down, find support. So I arrowed it and said, look, this is actually looking pretty promising. You've got resistance has now become support on the horizontal, but again, the horizontal for me is a slope. We work our way higher. We put in a significant high, we pull back. But look where we find support. This, for me, is probably the most significant bar in the last 6 months. And it's simply because we've now got all of that resistance that went back to 2014 and 15 has actually now just become support in this area here. And it's been a long time since I've been able to look at something like that on a gold or a silver chart. So then I turned a bit more cautious again, as I said, on the gold 240-minute chart, which coincided with this high right here. So again, we have a significant high. I draw in a clone line, and when we hit this particular line here, we paid attention to it. And in fact, on the day that we hit this line, I said, just maybe tread carefully. Trip. I can't read out what you've just typed in, but yeah, I know it's very unusual for me to use the word bullish and gold in the same sentence. But I did say cautiously optimistic. So anyway, we fell back, and again, we turned more bullish on the 240, took us back up into where I'm looking for resistance. We flushed through it this morning. So the line here is at 1262. We topped at 1272, which is obviously the 240-minute line of resistance. But as far as I'm concerned, I'm watching to see whether we can punch through really about here, about 1280. If we can start taking out like 1280 to the upside, at that point, I actually start looking to do something like, heaven forbid, drawing in an up fork on a gold daily chart. I cannot remember the last time I drew in an up fork on a gold daily chart. It's been some time. I think my charts were in black and white back then. It was that far back. So that's the daily chart for gold, and as you can see that I've just circled, we've got maybe some potentially interesting things going on at the median line. So that might be something that's worth paying attention to. So let's go and look at silver. Now, how is silver interesting? Well, if you zoom out, there's silver. Now, again, you can see what I've done is I've drawn in a sloping line from the highest high that we can draw a line in from, and I paid attention. In fact, what I said this morning was right here, I said I would look for resistance up around this area here, which is again around 1760. Should sound familiar because that's pretty much where I said to look for resistance on the 240-minute chart. Again, we flushed through it to the tune of about 10 cents. Decent pullback. I will be watching closely to see whether silver actually gets a pullback from this area here. But as far as I'm concerned, silver has definitely been a lot more, shall we say, perky than gold over the last week or so. If you look at gold versus silver in the last week, silver's definitely been the more bullish of the two. So that's the daily charts. So hopefully that gives you a bit of a feel for what we're looking at in terms of gold and silver. We do actually look at multiple time frames. So like, 240 daily, weekly. But that just gives you a bit of a feel. Now, what else was I going to try and look at today? Let's look and see what crude's up to quickly, because we've just got a few minutes left. Is this crude? Yes, this is crude. So here we go. Crude oil. So we were bearish back in this area here, which is obviously December into February. Paid attention to, again, think about all the charts that we've looked at over the last hour. I'm not looking at anything in a different way on any particular chart. It's always the same thing you'll find that I'm looking at. What is the current slope? When we have a current slope, does it work? Is it validated? Resistance, resistance, resistance. Now, when we've actually had that fork working, when do we see a change in behavior? Well, look at this. We breach out of the fork, it becomes support, support. So are you now bullish or bearish this particular vehicle based upon the fact that resistance has become support, plus we have now breached out of the fork, and even the sliding parallel that we put in this area here, messily becomes support. So we look at drawing in an uptrending slope. Uptrending slope seems to be working very well. Now we actually have a lower floor, to be fair, but we reverse back to the upside. This is actually, when is this now? This is back into March. We reverse back to the upside, but look, resistance, 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 resistance. You should have no doubt that this slope is working. Think about it this way. We just moved from 36.20 to 42.50, and we stopped within a penny or two of that particular line. That line has no relevance anywhere else. There is no reason why oil stopped in that area there other than the fact that that slope is working. I would have looked for support in this area here. We obviously didn't get it. But what did we get? We got resistance. Where would you look for support? Well, I'd look for support here if the slope is still working. We get a bounce. It's a very short-lived bounce. Now what happens? Well, we fall out of the slope. We fall out through support and reverse back to the upside. Where would you look for resistance? And more to the point, where did we get resistance? So we have support here. Would you look for it to work? Well, absolutely I would. Did it work? No. Did it become resistance? Yes. Think back to what I said on one particular chart. I forget which chart it was. And what I said was, if you have a change of behavior or if you have a behavior, I expect it to continue. So when I have support become resistance, I expect that behavior to continue. And what I mean by that is I expect a continuation of support becoming resistance. So you looking at this particular chart, you'd say, well, there was your last support and you were looking for resistance. This is back on April 1st. I said, look for resistance up at this line up here. And you'll say, well, that one didn't really work out. Well, it didn't. Until I think we actually did. Yes, there we go. We actually rose up and hit resistance. I want to make sure we did actually. Yeah, we tagged it. There it is. I think I just deleted the line. Let me put the line back in. There it is. So we actually went up, hit that resistance. Now look, support, support. We fall through. To be fair, it looked like we had a rising floor. Think back to the runner. Looked like we had a rising floor. Again, we fall back through. And so what I've been saying in the last, when's this? Friday? I think this was the back end of last week. I said I would look for resistance here, and I would look for support down in this area here. Support worked, albeit a little bit messily. Resistance also worked. But now look, this is crude inventories. So this is now live. This is what we're seeing as of this morning. So crude inventories occurred. I was looking for support down in this area here. You can see we didn't quite make it down to support. And in fact, we're just printing into a new bar now. It's just turned 1 o'clock. And I don't see any particular reason for a high in this area here. I could probably try and draw in a slide in parallel from this area here, but I don't see any particular reason to do so. I will leave it alone. I will simply watch for resistance up in this area here, support down in this area here. Think back to the fork, all the way back here. This is the pitchfork for crude oil. Look where we are right now. Look how far outside of that fork we are, and that slope is continuing to work. Bigger picture for oil, that's what I'm watching. That's the slope that I'm watching for crude oil, and that's the one that I think is still working. So I'm actually more bullish crude oil, I have to say. I hope this was a useful session. Again, we've hit like the 1 hour period. I'm going to wrap it up. Again, for those of you that are interested in seeing this analysis every morning, feel free to use this link, cognumcapital.com/promo. Hope to see a few of you join the service. I will send out a recording to this webinar to everyone that registered. So if you kind of... if you wish I'd gone through things a bit slowly, sometimes I can be accused of going through things a bit too quickly. You'll get a recording, and that will allow you maybe on Sunday morning over a cup of coffee to read or review the video and try and let more of it sink in. Thank you very much. Lots of kind comments. I really appreciate it. Mark, how are you doing? Aloha. Hope you're doing really well. Oh, you're in Mammoth. Nice. Alrighty, guys, I'm going to wrap it up. You all have a great day. Hope it was useful. I'll talk to you all soon. Be safe. Bye-bye.